Hello, guys. Welcome to this new episode number 21 of Chasing the Deal. Today, we are going to explore a market I like a lot. Maybe you may say it's not like a big market, but I really like it because one thing, cryptos. For those who know me or maybe follow me on my Instagram, you already know that I told you about these many things. I talk about many things about cryptos, especially stable coins and the new Genius Act. So this market, it's very in the light spots for the new Genius Act. So this market, it's Dallas. This market, it's Denver. So many people say that Denver is like the Switzerland of the U.S. because it's in the Rocky Mountains, and it's it's cold. It's a city. Many people go there in the winter to practice winter sports, snow sports like skiing. So there are many similarities between Denver and Switzerland because Switzerland, for those of you who are in the crypto space, it's also a crypto hub. So let's get into it, and let me show you my property analysis software. Okay. So this software, it's property analysis for commercial real estate, and it's the lead software for information on commercial real estate, at least on the US. So you can see here, we have many tabs here, and for each city or each market on the US. And for example, we have all these points are different markets in the US, but we also have some markets in, for example, Canada, like for example, Edmonton, Calgary, Montreal. We have some markets there, and we also have some in the UK, or I would say a lot of markets in the UK. For those of you who are willing to invest in Europe or the UK, you can get all that information here in Costa. So I like it. Many people don't like it because it's expensive, but I think it's worth the value. It's worth the price. So as you can see, we have many tabs here, like properties, which we can explore properties, on market and off market properties, and also properties for rent and properties for sale, and many options we have. We can find other owners here. If we want to call owners of properties, or we can find tenants and even brokers or real estate agents, commercial real estate agents here. Okay, so let me show you Denver. Okay, let's get into it. Okay, so here we have Denver. You can see it's not only the city but also the suburbs or other cities nearby. So let me click in, and you will see the first thing you will see here. I hope you guys can see all these numbers because sometimes I think they are a little bit small, but you may You can tell me, you can see all the numbers in the screen. But this first screen, it's like the summary for the market, okay? And it's up to date, okay? It's a market numbers for at least the last 12 months, and it's up to date. And you can see these 5 stars here. That means the quality of the asset. For those of you that are in the commercial real estate space, you may know about Class A, Class B, and Class C properties. So this rate system for CoStar, it's very similar. So if you leave all the stars, you will get all the information for all types of properties. But maybe if you just want to see Class C properties, you just select the first 2 stars, and that way you will see only Class C properties information. You will see the numbers change. But or maybe you want to see Class C and Class B properties, you select the first 3 stars. So you see it's very similar, okay? So if you leave just these stars blanks, you will see all the information on the markets. So the first thing you see here, it's at the top some KPIs or key performance indicators for each market. So for example, this number inventory is the total space for here. It's only industrial. We chose industrial. Let me show you again. You can select different types of properties like office, industrial, retail, multifamily, student, and hospitality. Okay, and you can see also sub-markets, okay, and even countries information. But sub-markets, maybe one big market will be divided in different sub-markets. But for this market, since we are only trying to find the general information on the market, we are going to explore only the market. If we maybe want to decide to invest in one market and then want to decide in a specific market, a part of that market, then we select the sub-market, okay? So then we have the inventory. It's the total space for industrial on this market, okay? Vacant space or taken space, okay? Or listed space. So then we have this number that is the under construction number. And we usually see here if the developers are betting for this market for new space, or they are cautious on this market. So if you see a growth in the under construction square footage, it shows it means that the developers start trusting that something in the future, in the near or mid future, it's going to happen. Okay, so they will build more space because they are forecasting more demand. Okay, that's what it says. Usually this number says. So this is the net absorption. It's an actual number. Okay, this is not like a forecasting. It's a number that it's backward 12 months, for example, here. 12 months net absorption, and that means new tenants moving in. New tenants moving in this market. So if in this case, for example, we see a negative number, that means more tenants are moving out from this market than moving in. Okay, it doesn't count the same market move in and move out. So for example, if you have one big tenant that moves out from one space and then moves in the same market. That doesn't come in. It only comes new tenants or this tenant expanding in space in this same market. So that way you can figure out if the demand for that market is growing or is going down. And then if you are a developer, you can start planning if you want to build new space. Okay. So the vacancy number also here you see you can see the absorption, for example, here for 12 months, for the past 12 months up to the present. Okay, but you can see a number year ago. Okay, like for 24 to 12 months ago. So you can see the trend here. So you can see 2 years ago it was 442,000, and then it's negative absorption. Okay, it went down 700,000 square feet net absorption. So you can figure out what is the trend in the net absorption. Okay. But these are just numbers. You have to read it and understand them and interpret, because it usually, maybe some investors, they will get scared on this trend. But you have in this market, I will later tell you the strategy, and you may say it's counterintuitive. Okay, but if you understand the strategy, it will make sense. Okay, so, or tell me if it doesn't make sense. So, for example, the vacancy rate also is a vacant space. Okay, the total inventory, from total inventory, how much space is vacant. Okay, so it went up almost 1% from the last year. And we have the rents, the market asking rent, okay, per square feet, it went down. Okay, and the market sale price per square feet, it went also down. And also the market cap rate went up. So you may know, if you follow me, that if the market cap rate goes up, it means you get less dollars for your investment. Okay, so your investment is less profitable. Okay, and also the assets cost less, get cheaper. Okay, so what you are trying to do after you invest, it's get the cap rate to go down, to compress, so that way your property will get more expensive once you sell it. When it's time to sell, it will cost more. Okay, so that's how the cap rate works. So you can see, for example, here the cap rate went up or decompresses 2.4% from the last year. Okay, so then you can see some summary here from this market. For example, vacancy continue. So in summary, if you are an investor, you may say all these KPIs are bad numbers, are no go for an investment. But again, you have to understand the numbers, and then maybe you have some other information that it's not here. Okay, some information about the economy. Okay, because usually CoStar, it's not very specific on the economy, especially on the economic trends. So economy matters a lot for real estate investment. Okay, so usually these are a no-go for an investment. Okay, but if you think it the other way, it's time to buy. Okay, because probably properties are cheaper. Okay, so for example, we can see here vacancy continues to climb in Denver industrial market, but there has been a slowdown in construction completions. So basically, what happened in all the markets in the U.S., all over the U.S., you have the COVID, you have the pandemic, and then you have a lot of demand. Okay, because the e-commerce went up because people were in their houses, so everyone was ordering things from Amazon or other e-commerce websites, and then these kind of companies start taking a lot of space, a lot of industrial space, logistics space, okay? And then developers start building a lot. So they start building in 2021 maybe, and then they finalized their buildings or their constructions maybe in 2023, but end up with a lot of inventory. Okay, so what happens here is the same thing. It's not very different from other markets. So you have this FOMO from developers, fear of missing out, and start developing a lot of space, and then they end up with a oversupply. Okay, so that's what's happening here. So for example, we can see some other numbers here, and we can compare with the national. For example, the market rents, it's a little bit lower than the national, okay, but almost the same. Vacancy rate, a little bit more than the national. And here's something you can see. That's what I told you. You have to know how to read the patterns. This availability rate, okay? I will show you in a graph below. Okay, you can see what's availability rate. Availability, you can see it's pretty similar to vacancy. Okay, so what it is? Vacancy, it's just vacant space. No one is inside. Okay, no one is inside, but it's ready to move in. Okay, but the available space, it's maybe a space that it's someone is inside, but maybe this tenant will not renew the lease. Okay, so the landlord start advertising this space as available. Okay, because maybe in 6 months it would be available. So they are trying to lease it out or rent it out before the tenant moves out. So it's not vacant space because the tenant is still there, but it's available because the tenant will not renew the lease. Okay? And then you have some available space, which is the space that it's under construction, that these landlords or these developers are advertising as available space because maybe in 1 year or maybe in 6 months it will be available, but it is not ready to move in, but it counts into available space. So that's why these numbers are bigger than the actual vacancy rate. What is interesting here is you have the total available space okay, which is direct space and sublet space, okay? So direct mostly is under construction space, okay? And then sublet space or under construction, or this space where you have the tenant and the tenant will not renew. But then you have the sublet space. When do you have sublet space? You have sublet space when you have a tenant, maybe a big tenant that has, let's say, 500 million or 500,000 square foot. Okay, they decided to rent this whole huge building, and then they got the tariffs from the government, and then plans changed. Then they realized they cannot import from China as they initially planned, and then they have to reduce. They will not, for example, if they are a warehouse, they will not fill all the space. So usually companies try to, if they are renting out, they are wasting a lot of money in that, and they are not using, they try to sublet that space, okay? So we have here a drop in sublet space. So that means these companies are going well, because maybe when we see in some markets, when we see these numbers rise, the availability rate, it's because these companies are not going good, okay? In most markets in the US, it's because these companies are not going well, and they are subletting space. Okay, you see it you see this trend. If they are subletting a lot of space, they are not going well. Okay, but here in this market specifically, you see even the available space rose. I guess because of the oversupply, the sublet space shrink. Okay, the sublet space shrink. So that means the companies are not going that bad. Okay, so we start unveiling the real numbers here. Okay, so we have vacancies and we have available space, but companies are going well because they are not subletting, especially big companies. Okay, you see here, because if you have a small space, you will not try to sublet because it's pretty small. Okay, you sublet in big spaces like 250 and over, or maybe at least I would say 100,000 square feet. That's the size where you start thinking about subletting. And those are the big companies. Those are the companies that move the economy. So these companies are going well, or they are thinking things are going to change in the good sense. Okay, so let's try to discover why they are thinking that. Okay, demand, net absorption. Okay, same things. Inventory. Okay. Existing buildings, inventory, sales went up. You see sales. This is also important because that means the investors are seeing, they see something. They see something because sales rose. They see something. They maybe see an opportunity, or maybe they see a trend in the near future. Okay, so let me see, cap rate. Okay, so here you have some graphs, some timelines that you can see. You can confirm we have bad numbers in this market. Okay, because you can see over 10 years, this is 10 years average. We are in the higher numbers. For example, in the vacancy, we are at the highest numbers from 10 years. Okay, so for example, in 2016, the vacancy was 3.5%, and now it's 9.4%. Okay, net absorption, same time, 2025, we have the negative absorption, and in 2022 we have the highest absorption. So we are all-time low, almost on all-time low here. But you can see first quarter was worse than the second quarter. Okay. Net delivered. Okay, you see all-time low. Okay, so net absorption. Let me show you one graph. On Bacon. Let me show you. I want to show you the graph on the available space. Okay. Available space, square feet total versus sublet share. So you can see here a drop from the last quarter of 2020 or 2025 on the sublet share. Okay. So it was going up until the last quarter or until the third quarter of 2025 of the last year, and then it suddenly drops. Okay, the sublet share. So something happens here that these companies change their mind about subletting space or maybe moving out from this market. Okay, so what happens in this time? Okay, then I don't want you to bore you with all these graphs. Basically, it's the same thing I already told you in these top numbers. Okay, but I want to start driving or pencil out the strategy. Okay, we are going to take in this market. At the beginning, I told you Denver is the crypto capital of the US. Why is the crypto capital? Number one, because we have a lot of companies, a lot of crypto companies here. Okay, we have a cold weather, which is good for crypto farming, but I will say there are better hotspots for crypto farming here because the electricity is not that cheap, like for example in Texas. Okay, but the weather helps. The weather helps for the crypto farming. Okay, because the colder you have the weather, the easier or the less energy you will take to call your crypto farmings. Okay, and the other thing is the people. You have highly educated people here. Highly educated people here that are in the crypto space. They are already, you have a lot of programmers, a lot of young people that are in they call them the, let me try to remember, it's the Web 3.0. Okay, Web 3.0 is all these applications or platforms that moves in the blockchain, that are developed for the blockchain. Like you have programmers or developers for Ethereum. There are another platform that is Solana, and you have many platforms. Why are these platforms important? Because we are going to enter into the main trend. I've told before the Genius Act, and you have now the Clarity Act. These two acts are, I would say, are the main strategy for this administration. Okay, are the main strategy. We are going to have a really big movement on the U.S. dollar. I would compare it with the Bretton Woods Agreement, which was after the World War II, and then you had another big event like this on the 70s. That was the petrodollar agreement. Okay, the first one, the Bretton Woods Agreement, you back the dollar with gold. Okay, and you made the dollar the reserve currency because you back the dollar with gold, and then you start printing a lot of money, lending to countries in Europe that were devastated. So that was the first time the US dollar was the reserve currency, was set as the reserve currency. So that was 1945, okay, at the end of the war. So then you tried, or the US government tried to print more money than he had in the world. Okay, so that's why they stopped the conversion with gold. They will not be after the Bretton Woods. If you have, I don't remember the exact quantity, but I think it was like $20. They will give you an ounce of gold. The government will exchange for an ounce of gold. But after that, in the 70s, since they wanted to print more money, the gold they have in reserve was not enough. So what they do is they stop converting or exchanging the dollars for gold. So that made a huge inflation on the US, okay? Because countries stopped using dollar. So what comes, the solution for that was came from this guy, from Henry Kissinger. He told the president that we can negotiate instead of backing the dollar for gold, we are now backing for oil because everyone uses oil. So they made a deal with the Gulf countries, especially Saudi Arabia, that they will sell their oil in US dollars, and then when they have the money, they will invest in US bonds. Okay, so that backed again the dollar into something. So inflation stopped, and the US dollar became again or still holds the reserve currency title. Okay. So then, after that, we come to this year, 2026. Okay. So we have Russia, China, especially China, trying to compete with the US to be the first superpower. And the country that is the first superpower, the top superpower, is the country that sets the reserve currency. Okay, so the US don't want to lose that position, you know. So what they are planning with this Genius Act and this Clarity Act, it's petrodollar 2.0, okay, or have the reserve currency still hold the position as a reserve currency, but this is different because this time we are not going with a country to negotiate, okay? We are just flooding all the world with US dollars. That's what we are doing. We are flooding all the world with US dollars. So there's only one way you can do that. Because if you try to do it with the current technologies or the current organization, you will hit a wall. Because, for example, with China, you cannot send dollars over there, and their people, they cannot buy dollars, okay? Because the government controls the banking, okay? So what we are doing is we have this Trojan horse that is the blockchain, and we are creating a Trojan horse here in the blockchain, and we are calling USD stablecoins. We are just putting the dollar there, okay? So since this crypto dollar or digital currency, it's inside the blockchain, China or any country cannot stop the dollar to get inside their countries. So what will happen is these countries, these people in these countries that are authoritarian, they tax very highly to their people, okay? And they are very authoritarian. So people don't want to be on the system, or on their currencies, because, for example, I will tell you just one thing. In Mexico, if you have a bank account, the government just can block or freeze your bank account because they want. And then you have to prove that you are innocent. So what kind of, you don't have any security for those investments, you don't have any, you are not secure, So what these people will do is they will buy the USD stablecoins, okay? So they will basically be in the dollar, but in the cloud, okay? Because their governments will not know if they have, how much they have, and where they have that money, okay? If Mexico or China or other country wants to tax these citizens, they cannot do it. If they want to freeze their accounts, they cannot do it. Only the US will be able to do it. So that means that all these people will have dollars on the banks, and since they have savings on the banks, we can print more dollars. Now the machinery has oil again. We can print because we have more reserves, and also the cryptocurrencies will be backed not only for US dollar deposit, but also for US debt. Okay. So it's basically what it says. It's a genius act. It's a genius act because it will make the US dollar to hold the title as a reserve currency. Okay, so these things, the blockchain, what has to do all that thing with this? Let me explain. All the blockchain runs, all these currencies will run in the blockchain. And the blockchain needs infrastructure to run, okay? They call miners, and basically it's data centers. So think about it. If everyone is gonna use the crypto dollar or the USD stablecoins, we will need data centers to run all these mining, all these operations, all these transactions. Okay, so we can do it, we can run it, these are called mining farms, okay, which are the same that run, for example, Bitcoin. Okay, but here in Denver, it's a good place. I would say it's not like the best because of the electricity rates, but it's a good place to run these mining farms because you have, like Switzerland, you have the mountains, so you have like a fortress, and also you have a lot of the government defense headquarters, especially air defense headquarters. So since this infrastructure will be critical, you have to defend it. You have to defend it, and you have the mountains, and you have also the defense systems from the government. So we are instantly got the strategy. So the first thing we can invest in here in Denver is warehouses to store these mining farms. Okay, that's one thing. We can invest in big warehouses. The second thing, and I would say the most prone to be running from Denver, it's the services for those farms. Okay, so if you will have farms here in the US, for example, in Texas, let's say in Dallas or Houston, you have farms because electricity is cheap, then you have to provide services for those farms. Like, what if those machines get broken? You have to fix them, okay? So basically, you will have these spaces, I would say, flex spaces, where these crypto companies can provide services for these mining farms. And also, you will have in these flex spaces, you may have some research facilities for these crypto companies. So that's basically the two things you can run, okay? I would do this in this market. Also in Denver, you have some of defense companies or aerospace companies that, let's say, if we go to a war, which is a thing, I think no one wants to go to a war with Iran or some other country. Maybe these defense facilities will move to Denver or will start producing more. But the defense or the defense industry will shine or will grow in all the country, not only Denver. So we can also bet for defense, but I would bet for something more like imminent, so like the Clarity Act and the Genius Act are imminent. Okay, they are gonna be implemented from July this year, maybe to the beginning of the 2027. So we still have cheap infrastructure, cheap properties here in Denver. So that's what we are going to do. I don't think we go for the mining farms because we have cheaper places for electricity like Texas, but we are going to go for flex spaces for these crypto companies that will use it as a research facility or maybe as a service facility of these mining farms. So what we want to do is, we don't want all the spaces. We want new shiny spaces, or maybe all the space, and then we fix it up and lease it as a new space or as a renewed space. So that's what we're going to do. We are going for the flex strategy, okay? And then we are going to try to get something vacant, something old, not that old, okay? but maybe from the 80s, and then we are going to make some static renovation and then rent it out. That's what we are going to do. Okay, so let's get into the part of trying to find some properties. Okay, so basically we have these tabs for properties where we can see all markets and listed properties for lease, for sale, and off market properties. But we also have this sales tab that I like to use more because it's the same thing. To be honest, it's the same thing, but I like more to use this for sale tab. And let me find vendor. Okay. Okay, so let's select only flex. Okay, flex spaces. Let's see first if we can get something new. Okay, something built after 2024, let's say. That way we just skip the renovation part. Okay, flex year build 2024 minimum. So we have basically, and we wanted vacant. We don't want cash flow. Okay. Let me exclude condos because I see a lot of properties. I think most of them are condos. So yeah, we don't have. Yeah, you see, I see 102 properties, and I only see a few spots. So that may mean most of them are condos. But we want to purchase all the property, not just one condo. Okay. Okay, so we don't have enough space because we want to purchase the whole space. So let me remove the building. Okay, 2024. Okay, so now we are looking for all the space. So let's say max 1990. Let's say 1980. 1980. Okay, we have 35. And then let's say remove condos. I don't want condos. Where are the condos? Because condos are small. You know, you need the whole space, the whole flex space. If you are planning to rent it out for a research company, crypto research company, or service company, you will need the whole space. You will not. And it will be better if you don't have neighbors. So, because you know these technologies will be critical, will be very critical. So You don't want any leak of information, or maybe any problem created by any neighbor. So you better rent the whole space to one company. Okay. So you build class A, existing. Where are the condos? Stories. Okay. Exclude condos. Okay, that we are good. So we are looking for something. Okay, and we want owner user. We don't want a cash flowing property. Okay. So we want to be close to a highway. For example, many of these crypto farms are in Phoenix, in Arizona, or in Texas. Okay, so we want to have connection with Texas. Okay, so probably we want to be on the south, or at least in the 25 highway. Okay, so let me see here. Okay, we have this here. Okay, let me filter by space. Property size. Up to 100, up to 100, okay? And from, let's say from 20. Wow, most of them. Okay, we have just three flex spaces from 20 to 100K, okay? 52, 32, and 13. Okay, let's select. Okay. Okay, so I think these are good choices. We don't need as many energy as a crypto farm, because we are only, this is for services or research. We will test some machines and everything, but we will not run a farm here. Okay, so I think we are good in a flex space, and usually flex space are usually close to the workforce. Okay, especially this is specialized workforce. We want to be close to them. Okay, so here we have, I think, 3 good options here. So the first one, I'm gonna open the poll so you can vote on which one you want me to analyze or take a look. The first one, we have the Arapaho Road. We have this for sale property. They're asking $7 million, and it's 52,000 square feet for research and development, which is what they want it for. We want it for. Okay. Okay. So we first option, we have this Arapaho. Second option, we have this Wolfensberry. They're asking 7.7 million. Let me. Okay. Oh, I clicked it. I messed it. Okay. Okay, again, we have this, the second option, Wolfensberger Road. It's only 17 days on the market. They are asking 6.7 million, and it was renovated in 2007, which may be good. Maybe we don't have to change the roof. It needs 32,000 square feet. And then we have last the Inverness Way. They're asking 3.5 million and 3.5 million for 30,000 square feet. Okay, so which one you want me to analyze? I'm gonna give you 1 minute to vote, and then I'm gonna choose the one you want me to take a look. Okay, so first option, Arapaho Road. Second option, Wolfensberger Road. And third option, Inverness Way. Okay, again, first option, Arapaho Road. Second option, Wolfensberger Road. And third option, Inverness Way. Okay, so first option, Arapaho Road, asking 7 million for 50,000 square feet. The thing is, with this one, it's already listed. Okay, so we prefer a vacant one. The second option, Wolfensberry Road, asking 6.7 million, and it has 32,000 square feet. And the last one, Inverness Way, asking 3.5 million and 30,000 square feet. So which one do you want me to analyze? Okay. So I think we have a winner here. So I think the winner is 21 Inverness Way, and they're asking 3.5. So let's take a look at this one. Let's take a look at the pictures. It looks good, like for a research company. You see, it's an infill property. You can see it has a lot of office space, which is good for a research. For a research, we usually need some office space and some warehouse space. but we don't need very high ceilings. So I think this is pretty good for something like a services, something if we want to lease it out for a crypto mining service company. I think it's good for lease. I like it. I really like it. It has some parking spaces. Looks more like an office building, but it's a flex building. You see, most of it is office space. Yeah, I like it. Time on market, it has 1 year on market. Great opportunity to get a standalone office flex building with a functional layout and ideal for a variety of users. Several offices, conference rooms. Okay. Okay, let me see the flyer. Okay, it went down a lot. Let me show you the flyer. Replace. Okay, now you can see the flyer. You can see it went down from 4.6 million to 3.4 million. Power 800 to 400 volts. Built in 1980. Okay, looks good. Let me show you again this coaster. Okay, we see price per square feet. Industrial 50%, office 50%. I think it's a good share of industrial and office space. I think it's vacant because it doesn't. I can see something about the leases, if it's leased or not, but I'm pretty sure it's vacant. Okay, so according to this, we will have around $9 or $10 net operating income. Okay, so let me make a fast calculation. Let's see the analytics. I want to see the cap rate. I think the cap rate here on the flex 8%. Okay, so the cap rate 8%, but that's a cap rate for a cash flowing property. Okay, this property is vacant. We have to lease it. Let me see the lease, vacancy, daily vacancy. Most to. I remember the most to lease was around 5 months. So we at least need 5 months interest to pay while it is vacant. Okay, so let's say if we have a NOI of 9, let's say NOI of 9, let me make the calculations. 9 by the total space, which is 30,906. That's the so we got almost $280,000 a year net operating income. So we will divide by a cap rate of 9 because let's say 8.5 because it's still vacant. It's still vacant. So divided by 8.5. So it comes to a price of 3.2 million, 3.27 million, which is pretty similar to the price they are asking for. So I think this is a good deal. This is a good deal. We may do all the cash flows or the calculations, but from this fast calculation, if we have a net operating income of around 9 per square feet and a cap rate of 8.5, I think this is a good deal with the right strategy. Let's say we take 6 months to rent it out. Okay, so that means the Genius Act and the Clarity Act will be ready, I think, before the end of the year. Okay, so those companies, those kind of companies that are going to serve the crypto infrastructure, these crypto companies, I'm pretty sure they are already looking for a space. So if we adapt this space for this type of companies, which I think it's already adapted for this type of companies, I think we will not struggle to rent it out. Maybe we will take less than six months. Okay, so I think, in summary, I think it's a good deal, this one. We don't have to do a lot. I think the building is good. Maybe we have to do some due diligence on the roof, maybe, because we don't want water leaking from the roof for this type of companies. But it looks pretty good. It was renovated in 2007, so I think there are not many things to do to this building. It's ready. It's just vacant, and we need to market to the right tenants, which are the cryptocurrency companies in Denver. So what do you think about this market, this strategy? I think sounds a little bit crazy, like the petrodollar and all these kind of crazy things. But if you think about it, if you make some research, you may start to think that it makes sense, because these crypto things, especially stable coins, it's a real thing for this year, for 2026. in 2027. So there will be many companies trying to make money in this space, and we are going to make things easier for them to find the space. Okay, so what do you think about this? What do you think about this market, Denver as the crypto hub? What do you think about this specific property and strategy? Maybe you will go for the mining, for the warehouse. Share with me your opinion in the comments in YouTube, in LinkedIn. You can follow me also on Facebook. So follow me on my social networks. Give me a like. And also, before I forgot, I'm a real estate agent. I'm a real estate agent with EXP Commercial. You probably already know EXP because we are the largest brokerage by the number of agents and number of transactions. And we have this subsidiary EXP Commercial. The main is EXP Realty. Those are for residential. And we are, I'm into EXP Commercial. And we have a network of agents all over the US and also all over the world with the EXP Realty Network. And I can find you, I can help you to find an industrial property all over the US. If you want to purchase a flex, an industrial, a warehouse space, I can help you with that in any market in the US. So if you want me to help you, you can contact me on my website or my LinkedIn or the description of this video. I will leave the link so you can contact me. Okay, so thank you for watching this live and see you on the next one.